Okay, welcome back, guys. So we're going to start with question 6 now. So this is the last question in the exam paper. So for this question, let's quickly see what is the required. So the first thing they asked you to do is the trading account. Now remember when we spoke about the trading account, we said trading account is used to calculate our gross profit. Okay, so that is the use of a trading account. Then they ask for the profit and loss account. Now, when we do the profit and loss account, we are actually calculating the net profit amount. And then they want you to calculate the final capital account balance. And this is the basically your owner's net worth at the end of the year. Now, to be able to do the capital account, you would need to know what is the opening balance. You need to know the movement. So the movements would be the profit or loss for the year, any drawings that occurred to get to a closing value. Okay, so let's go through the information and then we'll start with the trading account and the profit or loss account, and then we'll finish off with the capital account. So if we go to question 6 to the top, they tell you the following information was taken from the books of Johnson Stores at 31st of May, the last day of the current financial period. Now, they've given you a trial balance. Now, the reason they give you this is to see if you know what is income and expense accounts, what is assets, liabilities, owner's equity type of accounts. Now, when we do the trading account, if we want to do the gross profit, we would have to use the sales, cost of sales, and sales returns. So based on the trial balance they've given to us, I'm just going to say TA for trading account. We take the sales to the trading account. We take the cost of sales to the trading account. And we look at the further information. There's no sales return in this question, so we do not have to worry about it. That means if we've taken that to the trading account, the remaining items in here would go to our profit and loss account, the other income and expense accounts. Okay, now I'm going to just stop sharing the PDF and then share the Excel with you guys so that you can see how we complete the account. Okay, now if you take the trial balance that we've just discussed, when we take sales, now to get sales out of the sales account into the trading account, we would have to debit the sales account to make it a 0, and we credit the trading account. Now, when you do the trading account, you literally capture the sales on the same side it was initially in your trial balance, and the cost of sales on the same side as well. So that means seeing sales as a credit amount, we are going to, in your trade account, credit the sales amount for 2.65 million. Now, in this question, because there wasn't any sales returns, it was only the sales amount. But normally, the calculation is sales less sales return. That gives you the net sales. I'm just going to make this red. So this is generally what you have to capture, the net sales. But in this case, because we didn't have sales returns, it would be exactly the same as your sales amount. So we first capture the sales. Then the second entry is we capture the cost of sales that was provided to us. Now you will see the folio numbers for all of these on the general journal because we are using a temporary account. We will run this all through the general journal to account for these transactions. Now, if we look at this, we can see our sales was 2.6 million, but our cost of sales was only 1.3 million. So to work out the gross profit, we are going to balance this trading account, and the balancing amount will be your gross profit. But that amount we will take to your profit and loss account. So I'm just going to say this is the gross profit, just so you know. But because to work out our profit and loss for the year, so the net profit, we have to include this gross profit in this profit and loss account as well. So that is why we are transferring the balancing amount to our profit and loss account at the end of the month. So therefore, your balancing amount here in your trading account will be your opening amount in your profit and loss account. Is that better? Can you guys see that? Okay, so the balancing amount was 1.325 million, and that is the gross profit that we are transferring to our profit and loss account. Now the rest of the profit and loss account, I'm just going to make it a little bit smaller for the other guys, otherwise it cuts off. So the rest of the profit and loss account, what we will do now is we will capture all the income, all the expenses that were provided to us. So based on the information on the trial balance, the other income we had was interest income. Now income, just gonna make this side bigger. Income is always shown on the credit side of your profit and loss account, similar to what it would have been initially. So we would capture interest income with 35,000 Rand on the credit side of the profit and loss account. Because there's no other income accounts, that is the only account we capture on that side. Then on the debit side, we are now going to capture all the expenses that they've provided on our trial balance, which is the salaries and wages expense, the advertising expense, the insurance, the water and electricity. So we capture those amounts in our profit and loss statement with the amounts that were provided. So now the next step we have to do is we have to go and work out what is the balancing figure. Now the balancing figure in this statement would be the profit or loss for the year. Now what we do is you look whether the debit or credit side is the bigger one of the two. Now in this scenario, you can see the credit side is a lot bigger than the debit side. So we add up the credit side, we get 1.3 million. Then we transfer it to the debit side. And then the balancing figure, which is the 1.3 million, less all of these expenses gives you 23,000. Now that 23,000 we take to our capital account at the end of the year to work out what is the owner's net worth in the business. Okay, so once you're done with the trading account and with the profit and loss account, those accounts should have an equivalent debit and credit. They fall away. They will become zero. And once you're done with the profit and loss account, all your income accounts, all your expense accounts should also be zero because we are closing them off and we only updating our balance sheet accounts or statement of financial position accounts to reflect what is the net worth of the company at that point in time. Okay, so this is how we calculate the net profits. Are you guys okay here in the class? Can I go on? Guys online, are you still with me? Okay, so once we've calculated the net profit, The next step we now have to do is we have to go calculate what is our new net worth. So that is the third step they've asked us to update the capital account. So instead of doing the account, they just want you to work out the balance. Now, to work out the capital balance, we start with the opening balance that is given to us. Now, in the trial balance, the capital amount that is given there is your opening balance. That is the balance that was provided to you right in the beginning, because we have not captured any drawings, because we still have a drawings account. We have not captured the drawings to it. We have not captured the profit and loss because we have not done the year-end procedure. So we start with that opening balance. Then we add on the profit or loss for the year. Now in this scenario, it was a profit of 23,000 that we add onto the capital account. And then the next step is there's a drawings account that was on your trial balance. We close off the drawings account to your capital account, so we deduct any drawings that occurred from the capital to work out what is the new closing balance, the capital closing balance at year end. So how we work it out, we take the 500,000, we add the 23,000, which is the profit, and we deduct any money that the owner has taken out of the business during the year to get to their new capital balance, which is then 277,000. Okay, and the mark allocation would have been as follows. You would have received the mark for the opening balance. You would have received the mark for taking the profit. Now, if your profit amount here was incorrect, we would have given you a method mark for whatever you've calculated, and then you deduct the drawings that was given to you to get to a closing balance. And this is how you do the year-end procedure. Okay. Guys, do you have any questions on year-end procedures and closing off of your accounts? The guys online, do you have any questions?